Using an investment checklist has a lot of benefits attached to it. A checklist acts like a gatekeeper to your portfolio. Whatever your investment philosophy, you put those points in your checklist that these are the things we need to focus on for taking an investment decisions. So a checklist helps you focus in the right direction of your investment philosophy. Let's take an example where somebody is a value-oriented investor or a value-oriented fund house. They can have a checklist where the criteria that they look for in a company in terms of its valuations and all can be put into the checklist. So those can be readily done before the investment decision is taken. What checklist also helps in is it is a collection of our previous mistakes.
Right.
So if you made certain mistakes, you put it into the checklist so that you don't repeat those mistakes. And think of a power if you combine the experiences and mistakes of your analyst team or your group of investors into one. It increases suddenly the maturity and the experience of the team, because all the learnings that the team has are then consolidated into one checklist so that you don't make those mistakes later, and people can easily learn from each other on that. It reduces noise and disturbances because you're bombarded with so much data information. Many of that may be irrelevant to your investment process. So checklist cuts through that kind of noise and again brings you back to your path. It helps identify biases and sometimes also de-bias. It helps in controlling your bias. A good checklist will have areas where you're most vulnerable to biases or where biases can creep in into your investment process. So sometimes a confirmation bias, for example, can come into your process. You put a question in the checklist that talk to one of the analysts who has an opposite view of what you have on that investment and make note of the areas that that person is concerned about or is positive about. So that helps de-bias a little bit. Also, having a checklist reduces an endowment bias before you start taking investment. It leads to consistency and time saving also. Everybody in the team or the investor knows that we don't have to reinvent the wheel again when we're looking at a new security, a new investment. We have a checklist. This is what the data points we need to focus on, and that can keep repeating or moving itself.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.